Verizon is considered one of the best stocks to own for retirement. It appears 14% undervalued at current prices, and it's going ex-dividend tomorrow, October 7th. If you've been thinking about buying this 5G Buffett stock and you want to maximize your income from it, then you may want to consider buying shares today before they go ex-dividend. If you buy a stock before its ex-dividend date, you'll collect its next payout. If you buy a stock on or after the ex-dividend date, then you are not going to collect the next payout. Since I am all about maximizing my income, I ended up buying 100 shares of Verizon to lock in its next big dividend payout. At the same time that I bought shares, I also sold a covered call option against them to generate even more income. With that move, I locked in a 9.5% to 13.6% annualized yield from options income alone. So that doesn't even count the upcoming dividend, which will just boost that yield even higher. I'll get to the details of my covered call just ahead. First, my name is Greg Patrick, and if you like these videos, please give this one a thumbs up, subscribe to the channel, and tap or click the notification bell. Check out this chart. It shows the rate at which Verizon's yield has risen as its share price has fallen. As someone who invests for income, all else equal, I get excited when a high-quality dividend growth stock falls in price. In short, it gives me the opportunity to collect more income by locking in a higher dividend yield on entry. In the case of Verizon, thanks to its roughly 7% drop in stock price, along with a token increase to its dividend, the yield has shot up nearly 9% year to date. As a result, the dividend yield is currently sitting at 4.6%, which clobbers the market average. Of course, just because a stock's price drops doesn't necessarily mean that it's a good deal. We don't want to get caught in a value trap. That said, Verizon is far from a value trap, and Dave Van Knapp recently showed us why. In case you missed it, DVK featured Verizon as his dividend growth stock of the month for September 2021. Dave analyzed the company's dividend record, its business quality, its financials, and of course, its valuation. He valued Verizon using his typical 4 valuation models, and he came to the conclusion that Verizon's fair value price is $63 per share, with a max buy of up to $69 per share. At current prices of around $54.50, that would indicate Verizon is roughly 14% undervalued, making it a strong buy right now, in my opinion. Adding to the timeliness of this opportunity, Verizon goes ex-dividend on October 7th with a pay date of November 1st. So if you want to collect the stock's next big dividend payout, then make sure that you buy shares today. As for me, I'll be cashing in on the shares that I already own. I currently own 594 shares of Verizon in my private, long-term, buy and hold dividend growth portfolio. Considering the stock is paying 64 cents per share per quarter in dividends, those shares will be paying me $380.16 on November 1st. That's what's happening in my buy and hold portfolio. Now, as I mentioned before, I just made a move in my retirement account with Verizon that offers a relatively safe way to double and possibly even triple the stock's annualized yield. I'll get to all of this in just a second, but first, I'd like to remind you that we offer a Dividends and Income email newsletter. It goes out several times a week. It's entirely free, and the articles typically go into a lot more detail than what we can cover in our YouTube videos. Also, in the coming days, I'll be sending out my full ex-dividend calendar for October 2021. I'll be sending it to our newsletter subscribers. If any of this sounds like something you could benefit from, then be sure to sign up for our DNI newsletter so you don't miss it. To get on the list, just go to dividendsandincome.com and look for the subscribe form in our sidebar. So, what did I just do in my retirement account to generate a 9.5% to 13.6% annualized yield from Verizon? In short, on October 4th, I bought 100 shares of Verizon at a price of $54.55 per share, and I simultaneously sold one December 17th, 2021 $55 call option for $1.05 per share. By selling a call option on Verizon, I'm giving the buyer of the option the right, but not the obligation, to purchase my 100 shares at $55 per share any time before December 17th, which is the expiration date. In exchange for that opportunity, the buyer of the option paid me $1.05 per share, which is known as the premium. Because I collected immediate income when the trade opened, I immediately lowered my cost basis from $54.55 per share to $53.50 per share. The ability to immediately lower cost basis like this is exactly what makes these kinds of trades safer than simply purchasing shares of the underlying stock the traditional way, which is buying them outright at market price. Yes, I'm limiting my potential upside. If Verizon shares climb to $60, for example, I'll still be forced to sell at just $55, but I'd still be selling shares for more than what I bought them for, and I'm generating high income in the process. It's a trade-off, and it's one that I am willing to make because this strategy, by its very nature of selling a call option instead of buying one, is designed to be conservative and generate income. There are two likely scenarios for how this will all play out, and they both spell double-digit annualized yields. Scenario 1. Verizon stays below $55 by December 17th, 2021. If Verizon stays under $55 by December 17th, I'll get to keep my 100 shares. In the process, I'll also have received $105 in call income. The call income was collected as soon as the order was filled on October 4th. It was deposited in the account where I made the trade, which is my 401k retirement account. On a percentage basis, I received a 1.9% return in income for selling the call option in 74 days. That works out to a 9.5% annualized yield from options income alone. Now, because I jumped on this opportunity before the stock's October 7th ex-dividend date, I'll also be collecting the company's next dividend from the 100 shares I just bought. Accounting for the dividend income, my annualized yield would jump to over 10%. Scenario 2. Verizon climbs above $55 by December 17th, 2021. If Verizon climbs over $55 by December 17th, my 100 shares will get sold or called away at $55 per share. In scenario 2, like scenario 1, I still get to keep the $105 in call income. I'll also generate a $45 capital gain because I bought at $54.55 and I'll be selling at $55. In this scenario, I'll be looking at a total profit of $150, not including any dividends. From a percentage standpoint, I'd be getting a 1.9% instant return in the form of income for selling the call option and a 0.8% capital gain. I realize that doesn't sound like a lot, but if I can repeat these results over the period of a year, that works out to a 13.6% yield from Verizon. And again, that yield gets boosted even further when you consider the dividend that I'll collect. As I've mentioned several times before, selling covered options like this is one of my favorite ways to generate relatively safe, high income from some of the best companies in the world. Finally, and I know everyone's situation is different, but there are a few rules that I personally follow before selling covered call options like this. I'd only make this trade if 1, I wanted to own the underlying stock anyways, 2, I believed it was trading at a reasonable price, which is fair value or better, 3, I'd be comfortable owning the stock for the long haul just in case the price drops significantly below my cost basis by expiration, 4, I'd be comfortable letting the stock go at the strike price if shares were to get called away. 5, to be mindful of position sizing. With the exception of a few rare cases, the value of this position wouldn't exceed 5% of my total portfolio value. And 6, to minimize taxes and paperwork, I would most likely make this trade in a retirement account, such as an IRA or 401k. All right, guys, that is it for today. Thank you for watching if you made it this far. If you got any value out of this video, please give it a thumbs up, subscribe to the channel, and tap or click the notification bell. Also, don't forget to head over to dividendsandincome.com and get on our email list. I will be publishing my full ex-dividend calendar for October 2021 in the coming days.